Welcome back, everyone, to Money Vikings. Thank you very much for joining us. I hope that Money Vikings makes your life a little brighter through investing, health, collectibles, and more with a very special episode for you today. Please consider liking and subscribing if we add value to your life. So, with that, let's get into it. These are my three greatest real estate investment trusts at the moment. And I want to talk about why real estate investment trusts, I believe, are such great investment vehicles and add to our wealth building journey, and some of the advantages of real estate investment trusts, and again, get into the three that I am really adding positions to at the moment. So, with that, let's get right into it. What if I told you that you could own a slice of the world? Yeah, okay. Sounds pretty crazy, doesn't it? But I actually believe that through real estate investment trusts, we all can own a little slice of the world. And I don't mean a bad slice of the world. I mean a nice, high quality slice of the world that actually pays us a dividend either every month or every quarter. So that's what I think about real estate investment trusts. You know, they're a lot different than other investments in my mind because a real estate investment trust, the underpinnings and the foundation of it are real property, so real estate, that's something tangible. It's a lot different than investing in, say, cryptocurrency or even a tech company that could get run over by one of their competitors and the stock price could collapse because of a new technology that comes out or a new crypto that comes out. So I think REITs are a lot different. They can be a little bit more relied on, especially high quality ones. So let's get into the first one. The first one, I believe, is poised for a bright future, has had a bright past. Is Realty Income, ticker symbol O, currently a 5% dividend yield. Yes, Realty Income, the golden child of REITs for darn good reasons. We're talking about 637 consecutive common stock monthly dividends throughout its 54-year history. We're talking about increasing their dividend 121 times since they went public in 1994. That's an amazing track record through many different times of economic environments. They own and operate with such tenants such as Home Depot, Kroger, FedEx, 7-Eleven, Walgreens. Just imagine next time you go get your Slurpee at 7-Eleven. You walk into that building, and in your mind, as you're getting your dollar Slurpee, you're also getting dividends every month from Realty Income off of the property that they own and operate. Imagine next time you have to fix something in your house and you go to Home Depot and the Home Depot property is owned by Realty Income. Again, you are picking up off of some of those profits, okay? CVS, Walmart, etc. Same thing. So it looks like Realty Income is trading at a 44% below estimate of fair market value at the moment. They're forecast to grow 8% a year, and the earnings grew by 54% last year. It pays a high and reliable dividend at 5%. Pretty darn awesome. Okay, so next one, number two. Number two, I love Crown Castle. Everybody's addicted to these things, right? Internet of Things, cell phones, everywhere, technology, connectedness. Of course, that is the present and the future, probably only going to grow. Well, Crown Castle owns the network of cell towers that keep all of this cell technology and all of this communications infrastructure actually going. There's a hard infrastructure behind all these airwaves that keeps everything going. So we know that technology is growing and changing. Crown Castle typically is, at least at the moment, is doing a 6% yield. So that's a pretty nice return in terms of dividends. And it's one that I'm going to add positions to. So the third one I'm going to mention, WP Carey, ticker symbol WPC. We're talking about a 6% yield. So this one's been beat down a little bit lately because they've had about 16% exposure to the office environment, which we know is having some troubles. But check this out. We're talking about 29% of rents are coming from industrial assets. We're talking about 24% from warehouses. We're talking about 17% from retail. We're talking about 4% from self-storage. Okay, so you can just see it's a really strong, diversified REIT. I love WP Carey, well managed, et cetera, broad exposure. So check out truewealth.moneyvikings.com for more info on these REITs. Again, please consider liking and subscribing. And I think the final thing I'll say is I also capture the breadth of this whole concept with VNQ, with the Vanguard Real Estate Fund. So that's a way to own a piece of the whole real estate pie. Check out our other videos where I compare owning private real estate and operating that versus owning real estate investment trusts. I'm going more the REIT route in the future because of the hassle of private real estate that you just don't have with REITs, where you get the same kind of exposure and you can get all kinds of dividends and growth potential in that area as well. So check out other videos as well. We're going to do more on other REITs, but appreciate you tuning in, and be kind to yourself and be kind to each other. Thank you very much. Take care.